Well, good morning, Joginder Rana here. The topic for our discussion today is standard fire and specific policy clauses. Standard fire and special peril policy clauses. First one is agreed bank clause. If insured property is financed or hypothecated by or a financial institution, an agreed bank clause is taken. So the policy is taken in the name of the bank. All information provided to the bank will be considered as delivered to the insured. At the time of claim, bank will receive the claim amount of claim. Next one is contract price insurance clause. This is applicable only for imported goods. Goods have been sold but not delivered. Contract has been cancelled due to damage of goods by fire or by any other peril insured thereby, and the insurer will indemnify as per the contract price. This is called contract price insurance clause. The next one is designation of property clause. Insurer agrees to accept the designation under which the property has been entered in the insured books. Under this clause, so if there is property which is named differently or insured has given some name to it, insurer may accept the nomenclature of the same property as given in the insured books. For example, insured has mentioned electrical installations as plant and machinery, however generally it is part of furniture, fixture and fittings. So in such cases there will be some confusion at the time of loss and claim settlement. So to avoid such confusions and disputes, if insured has opted for designation of property clause, insurer may accept the name he has given to it as per his books. The next one is the reinstatement clause. So under the reinstatement clause policy or reinstatement value policy, the payment to be made is the cost of reinstatement of the building or the cost of replacement of the machinery to conditions equal to its conditions when it was new. There is no depreciation for uses and full reinstatement cost is paid subject to the sum insured covered under the policy. Hence, it is advantageous to insure property on reinstate value basis, but care should be taken to ensure that the sum insured represents the current replacement value, otherwise the condition of average will apply. So this is a reinstatement value clause. Now reinstatement clauses. Reinstatement value insurance policy may be granted on buildings, machinery, furniture, fixtures and fittings only. The insured must intimate to the insurer within 6 months from the date of destruction or damage or such further time as the company may indicting allow with intention to replace or reinstate the property destroyed or damaged. The insured must also intimate to the insurer indicting his willingness to replace or reinstate the property destroyed or damaged on the same or another site. The clause further says that the work of replacement or reinstatement must be commenced and carried out with reasonable dispatch and in any case must be completed within 12 months after the destruction or damage. So for any further extension beyond 12 months, the insured must obtain prior approval in writing from the insurer before expiry of 12 months. Then the next clause is local authority clause. This clause is available as extension in reinstatement value clause. This clause permits to pay additional cost of reinstatement solely by reason of the necessity to comply with the regulations of local authority. Then comes escalation clause. So it will be in order for insurer to allow automatic regular increase in the sum insured throughout the period of the policy in return for an additional premium to be paid in advance. The term and conditions for this extension shall be as follows. The selected percentage increase shall not exceed 25% of the sum insured, and the automatic increase in the sum insured will be on pro rata basis. The additional premium payable in advance will be at 50% of the full rate to be charged on the selected percentage increase. So the sum insured at any point of time would be assessed after application of the escalation clause. Escalation clause will apply to policies covering building machinery and accessories only and will not apply to policies covering stocks. Escalation clause will apply to all policies and is not restricted to policies issued on reinstatement value basis. So pro rata condition of average will continue to apply as usual, and the automatic increase operates from the date of inception up to the date of operation of any of the insured peril. Next one is removal of debris. So after a fire, since there is a lot of debris all over the premises, it is necessary to clean this debris before repair and renovation work can be commenced. And tariff, there is provision to pay cost incurred for removal of debris. The cost is up to 1% of the claim amount and included in sum insured. However, this limit has been doubled in the Bharat Sukshma Udyam Suraksha, Bharat Laghu Udyam Suraksha policies. It covers the cost of removing the debris, dismantling or demolishing the building and machinery, shoring up of propping of building and machinery. Then comes architect, surveyor and consulting engineers fee, because up to 3% of the claim amount is already covered under the policy. Over and above 3%, because after loss, expenses incurred towards architect, surveyor and consulting engineers fee for plans, specifications, tenders, quantities and services in connection with the superintendence of the reinstatement for the building, machinery, accessories and equipment, up to 3% of adjusted loss, and this does not include any cost in connection with the preparation of the insured's claim or estimate of loss in the event of damage. The next one is floater clause. Floater clause covers single specified sum insured for more than one specified location, 10% loading on applicable premium rates, address of all locations should be mentioned in policy, insured must have good accounting and internal audit procedure. Then comes declaration clause. Declaration clause is advantageous for customers who are dealing business in which there is frequent fluctuations in stock sum insured. So tentative sum insured is declared by customers. An insurer gets premium on the basis of this tentative sum insured. Basis of declaration is average of value on each day of the month and highest value during the month. Then voluntary deductibles clause. If customer opts for higher deductible, insurer can allow specific discount on premium. Since now erstwhile fire tariff rates are deterred, this clause does not have much importance. So this is all about the fire insurance clauses which are applicable to the standard fire and special peril policy. To no other policy these clauses are applicable, because other policies applicable in fire insurance category are the policies which are introduced by IRDA, and this is the policy which is since beginning as per the provisions of the tariff. So all these clauses are applicable to this policy only. Thank you very much.